All right, YouTube traders, I am back again with another video, another Ichimoku video, talking about pretty much the same last couple trades that we've been looking at, these Kijinsen bounce trades. Looking at another Kijinsen bounce trade, I have my zone here, drew a nice little area where I'm looking for the market to bounce off of and then enter into the trade for a long trade. Your future is bright, so you got a bright future. Your TK crossover is bullish, and then you got price above the cloud, and then Chiku span is above price. Everything is bullish. It looks like the little trend here just started is bullish. We're getting correction, move higher, correction, then move higher. So quite possibly looking at this 1, 2, 3, then shooting for 4. We enter the market at 3, so we want to see if the market holds at this level. I don't want to see the market break this Kijinsen. All right, so currently we have the Williams % closing above -80, which is very good. A lot of times, and the reason I'm not setting up this trade right yet is because I believe we could get a little lower, get into this zone or get down to the Kijinsen level before we go higher. Now, there's a couple ways I can enter the market here. I could put a buy stop right here based off of the break above -80. And the rejection, okay, and then the entry here. So I could enter here. I could put a buy stop here already, but I believe I may get a better entry lower than this. But then the next thing I could do is also put a buy stop. Now this is, to me, it gives me more risk because it's deeper, it's farther away. But I can put an entry here as soon as price breaks this level, because this whole area is your zone, support and resistance zone. The market, Ichimoku makes these zones based off the market volatility, and that's how come these everything is set up the way it is with as far as your settings, your periods and stuff. So this zone is going to be a support and resistance zone. So basically it's support now. We want to see if the market honors it. We could trade outside of the zone, but we could get a better entry, maybe lower. So we're going to keep our eye on this. We need to probably put an alert on this thing, and then we could quite possibly catch this trade. All right, so I'm gonna keep you guys abreast of when I get ready to enter, and we'll set up our entry. But currently we're looking for the pullback, then the enter into the long trade. Okay, so we'll revisit this when it's ready. All right, guys, so we're back looking at this pound Swiss franc a couple days later, and you can see we did have our bounce right here. Now the price is moving higher. Got a pretty good bounce off of our level that we were looking at, because basically we were in a little zone, but we were keeping in mind the Kijinsen is what we wanted to bounce on. All right, so now what you're seeing is a thicker cloud, but now the cloud's not rolling over. So I always talk to you about these thick clouds, because if you look at a thick cloud, top or bottom, no matter where we are, like when you're looking at a bottom and a top, I'm going to show you both, but say you're at a bottom like this, and you come down to this bottom, you see this cloud very thick like this, and then the cloud starts to roll over. This, in this case, it looked like it dropped a little more because you could see it here, and then it rolled over. Usually, like, you'll have a support and resistance level. So you have a level here, and you'll see that the market rolls over. I mean, the cloud rolls over. The market dropped a little more here. That's why you got this little drop here. But usually it just rolls right over here, because you wouldn't break this level. You just start to move to the upside like you see here, and then that gets you a full-blown move to the upside. Same thing down here. You could see thicker cloud, and the market rolls over. The cloud rolls over. The market's moving higher. Up here you could see thicker cloud. You found the top. I usually like to find that top to see if it's in line with any other support and resistance level, and then I'm got a pretty strong analysis that market might drop off of the resistance level. But you get a thicker cloud that gets really thick and then starts to roll over. You could see price starts to drop, and boom, Kumo breakout to the downside. So my last thing here is this opportunity here that I discussed with you and told you that we were looking for the Kijinsen bounce. Well, we got that Kijinsen bounce that next day, because I believe we were here one of these days, but we dropped lower, came down to the level, because we weren't quite at the Kijinsen when we talked about the video when we talked about it previously. Now you got a TK zone. Looks like you're getting ready to have a crossover that might be bearish, but I think once you see that momentum go, you'll start to see Tinkinson go also. So we should be able to see this thing move higher. That's how you trade these Tinkinson bounces. Now I didn't give you precise entry because what I'll do is I won't stay on this daily time frame all the time. I'll go down to the 4-hour time frame. All right, and then I'll look for my entry. So I'll go down to the 4-hour. And then you can see where the market came into my zone right here. There's a lot of ways I could trade my zone, but when the market came into my zone, I had a setup here with the rejection candle right here on the 4-hour time frame. And all I have to do, place my entry a little bit above that rejection, let the market trigger me in, stop loss below the zone, and then you can see you're in profit. All right. So once you get into your trade area, you want to drop down to your 4-hour time frame. So pretty much when you get to your level down on the Tinkinson, Kijinsen, or any kind of zone that you're trading, that's when you switch to your 4-hour time frame, and then you go here. Now this is the weekend here. Then the market, boom, blows open, and you can see what happened. Nice move to the upside. All right. So that's what you're looking at. That's the kind of trade you want to be looking at. Tinkinson bounce, Kijinsen bounce. Tinkinson bounces are really good. You follow the Tinkinson to the downside or to the upside, whichever way. So we talk about those. So I'm going to get started with this webinar series. I promised you guys. Just been down and out a little bit, sick a little bit, but I want to start getting these videos online for you so I could show you how to trade this Ichimoku. All right. Hope this one helped you. Till next time, have a great one. God bless.